what is an option? Oh, I said a thin line of difference between both. I'll give you in the next class. Sorry, I forgot it. So there is a difference between option and warrant, a thin line of difference. Hope I'll give you in the next class. That is on Friday. I'll give you what is the meaning of it. An option or a warrant, if I'm holding, means I can execute anytime in the future to buy my shares. Okay. So if I execute the option or a warrant, I may buy it at a predetermined price. I would have bought this warrant for a long time. So I'll wait for a while. And when the price of the share is increasing or decreasing, that time I'll execute it. Okay, and I'll execute and I'll buy more shares. So in order to have a capital gain by selling or something else for the purpose. So I can execute a warrant anytime later on. Okay, so total number of shares issued on the exercise of option normally will split into two. Number one is the number of shares that would have been issued if the cash received has been used to buy the shares, fair value. That is, fair value is $5 per share, means how many shares you would have bought it out of the option number, and the remaining will be treated as bonus shares. Okay, for this I can give you an example. Okay, let us assume you're going to a boy is going to a shop and he's buying some chocolates. Okay, and he's carrying, let us assume $20. Okay, and he want to buy a particular chocolate which he selected, but one chocolate is 6 rupees, that one. But he want 4 chocolates of that. So 4 chocolates means how much will it cost? Just an example, you can answer.
Ma'am, what's the price, ma'am?
That's what. Okay, the chocolate price is $6.
24.
24. It will cost 24, but the boy is having only 20. So, but the shopkeeper saw him and said, okay, fine, I'll give you the 6 chocolates. Okay, spelling is wrong. Okay, I'll give you 6 chocolates. You pay $20. So, how much is the bonus quotient in this? How much is the discount given to the boy?
4.
4. Okay. How much is the number of chocolates given on discount?
No.
No. 4 chocolates given on discount. See,
One
rupee $4 is the discount. What you got it? Correct. I'm asking how many chocolates are given on discount?
6.
Entire 6. How many chocolates he bought?
4 by 6.
Now I'm just asking how many chocolates he bought as of now. He bought 4 chocolates. Okay, but the market price of this 4 chocolate is how much?
24.
24. Did he pay 24?
No, ma'am. 20.
He paid less than that. So some number of chocolates are also given on discount, right? He got some extra chocolates. But you cannot tell one chocolate also here, one chocolate or 2 chocolate. You cannot tell that because one chocolate is 6 rupees. But he paid 20. He didn't pay 18. If he paid 18, we can tell one chocolate he received as bonus. He paid 20. So there is a portion of free items also in that. Am I right? Not only the rupees as well as a free item also is there, right? This is what we are going to calculate now. Therefore, DEPS also include a free number of shares in it. Okay, this is what you should understand. Not only the discount in amount as well as a free number of shares are also given as a free quotient. He had received some free quotient also. Before going to problem number in your exam kit, I think illustration 6 will do good if you learn it once and then proceed with. That is before going to exam kit 123. If we do illustration 6, it would be better. Just a minute, I open your exam kit. Study text, if I open and take illustration 6, it will be really helpful so that you'll get a practice of 2 problems. You go to the illustration, you can go through the illustration problems also. It's really good. It will make you understand very clearly. So this is the problem in illustration 6. See here. On 1st Jan 2007, a company has 4 million ordinary shares in issue and issues option for a further million shares. Further million shares means how many? How many options? 1 million, correct? So they issue options for 1 million shares. The profit for the year is $500,000. During the year 31st December 2007, that is the year end, the average fair value of one ordinary share was $3 and the exercise price of the shares under option was $2. That is average fair value, that is the fair value of the share was $3 year end, but the option can be exercised as $2. That is less than the, like how I told you, less than the chocolate price he paid and got the chocolates, right? Same way, he's going to this, the person who's holding the option can pay less than the fair value and he's going to exercise the option. So let us do this problem in OneNote and come back here. The problem is if I share the screen, opening every app will take some time. Just a minute. Just let me know whether you can see OneNote here. Can you see OneNote?
Yes, ma'am.
Yeah, 1 minute. To understand this concept of DPS, this problem will really help you out. Hope you can see this. Okay, so listen, on 1st Jan, this is your illustration 6. So on 1st Jan 2007, a company has 4 million. So initially they have 4 million. And how many options were issued? Further million shares means it's 1 million. So options were issued for 1 million. So I'll just write here. So options is equal to 1 million. This is number. And how much is one option? Based on the option, how much you can, how many shares you can buy? That is, the option was issued at how much? It is given as 2 million. So into $2. So you have 2 million worth of options in your hand. Okay, so how many number of shares you can buy based on 2,000, that is $2 million. Number of shares at market price, how many you can buy? Now you have 2 million worth of shares with you, the 2 million worth of options you have with you. If I want to use this entire 2 million and I have to buy shares at market value, how many I can buy? Okay, how long you'll be silent?
Divided by 3.
Divided by 3. It is given here, right? One ordinary share was 3 million. This is given here very clearly. So that is average fair value. That is the average fair value of one share. One ordinary share is 3 million. So one share is 3 million. Now I have 2 million rupees. Sorry, $2 million with me. So how many shares I can buy?
666,600.
Yeah, you're correct. How you got it? How you got it?
Yeah, I divided it by 3, ma'am.
Correct. You're correct. So 2 million divided by 3. So you got 666,667. Correct. So you know 2 by 3 always it comes like this. So 666 and 667. This many number of shares you can buy if you are buying at a market price. Okay. So now, but how many shares he was issued? He can buy only 667. Sorry, 666, 667. So this many number of shares only he can buy. But how many shares he was issued through option?
1 million.
1 million. Correct. You can make out here. It is given here. A further million shares were issued. Can you make out? Issue options for a further million shares. So 1 million share he was issued. Yeah. How many number of free shares were issued?
1 million minus 66667.
Very good. So originally you can buy 1 million. See, actually you can buy only 666,000. This number is always a problem for me. 666,667 shares. But you bought 1 million. How many extra shares? So it is 333,333. Correct. This is the number of shares issued free. Actually, the same, the chocolate story I told you, right? Some number of chocolates were issued free. That's what the same case here. So you were issued, the person was issued 333,333. Okay. So many number of shares were issued at free of cost. Okay. Now how to find DEPS for this problem? So whenever you're calculating DEPS, you have to, the number of shares issued for no consideration is added to the number of shares while computing DEPS. This line is exactly given in the question in your book. Okay, if you see here, I think this line I've seen somewhere in the book. Somewhere this line I've seen in the book. I'll just write it somewhere. Okay. See here. Can you see this here? The number of shares issued for no consideration is added to the number of shares when calculating the DEPS. Okay, now we go to this question, this answer here, how it can be solved. So how to find DEPS in this case? Okay, when there is an execution of option or warrant, how we are going to do? You have to find how much is the earnings. How much is the earnings in this problem?
$500,000.
$500,000. Okay. So earnings is given as $500,000. Okay. And now I have to find DEPS. So this 500,000 divided by the total number of shares I have to take. Now how to find out how many number of shares I have? So to find out the number of shares, first you have to compute what is the basic number of shares you have. How many number of shares initially you had?
4 million.
4
4
million.
million. Very good. So you had 4 million number of shares. Now, how many extra shares, free shares due to option?
1 million. No, free shares.
Free. Yeah, free.
33333.
333.
Okay. So free shares is 333. So this is how much? 4,333,333 number of shares you have. Now to find out DEPS, it is earnings, that is $500,000 divided by 4,333,333. This is the diluted EPS because of the free number of shares as well as the original one. So 4,333,333. How much you're getting? So getting 0.11538. So you can have 3 decimals at least. So I'll just write 0.115. So which is equal to 11.5 cents. You can have 4 decimals also, still more good. So you can have 3 or 4 based on the decimal. What is your 4th decimal, 5th decimal? Based on that, you can number it. This is also absolutely fine. So this is the DEPS, actually, diluted EPS. So we are taking only the free quotient. The exact option we are not considering. We are considering only the free share to find out the diluted EPS. We are not taking 1 million exactly. Yeah.
Then, ma'am, what about that 666 number of shares?
That is the actual rate. Based on the actual rate, you would have got this. We are not taking. We are just finding the diluted EPS. For diluted EPS, you have to always pick the free shares with the basic amount, basic 500,000.
Okay, ma'am.
Not 500,000, basic 4 million. With that, you have to take only the free share. Now, in the same way, we'll try solving the next exam kit problem. Actually, I need not solve this illustration, but if you solve this, it may be helpful. That's why I thought of doing it. So let us see here. Actually, 2 formulas are there. This number of free shares, another way you can calculate it. How you can calculate other way? So this is easy actually. Other way also you learn it because in the book that is what is given. I'll just show you in the book if you see this formula. Okay, number of options into fair value minus exercise price divided by fair value. This is a formula given in the book. Like that also can come to that. This particular part which I'm speaking here is just a minute, wait. This one, this number of free shares issued. Instead of computing this entire number of market shares, number of free shares, instead of going like that, you can do in another way based on the formula. The formula is number of, we need only number of shares issued. No, we don't want what is the number of shares issued at market price. So number of shares issued free, for free or freely issued, whatever. So it is number of options, how many number of options you have, into fair value minus exercise price of option, okay, divided by fair value. In this problem, if you see number of option, you know it is 1 million option into fair value was $3 minus exercise price, that is option price, was $2. So divided by 3. Then also you will get the same value, that is 333,333. But here you have to remember the formula. There you no need to remember the formula. Could you understand? See?
Yes, ma'am.
Yes, ma'am.
This step 1 and step 2, you can avoid if you are going with the formula. One step you have to know. This is also easy. In this number of option, how much is free? That is, I have to pay 3 rupees, but I paid through 2 only. That is 1/3 price I didn't pay. So 1/3 I'll take it and do. This is also easy. Instead of, I normally will not insist you to remember any formula. You have to understand the logic and go. Okay, whatever be the formula, there will be some logic. The fair value minus excess price. So this $1 is the excess thing which you actually gained it. Right, instead of paying 3, you paid only 2. So $1 out of $3 you gained as a profit. So that is your free amount. So 1/3 to 1/3. 2/3 is the actual amount you paid, but 1/3 is a free quotient. That way you can understand this. So let us go to exercise, exam kit 123 and try solving it here. So in exam kit 123, let us read this problem. It is given. ISCO's financial statement show, I'll just expand this problem for a while, then I'll minimize it. So ISCO's financial statements show a profit for the year to 31st December 2005 of 2 million. They've given the earnings as 2 million. On 1st January 2005, ISCO had 4 million shares in issue and made no further issues of shares during the year. At the end of, that is 31st December 2005, there were 1 million outstanding options to buy at $3 for each. For the year 31st December 2005, the average market value of ISCO share is 5. So fair value is 5. Option you are buying at 3. How many number of free shares you have? Same thing. You can go either with the first formula or with the easy one, whichever you feel comfortable, you can go. So here, how many free quotient is how much? Number
1
of
million.
options.
1 million.
And 1 million is not free. One entire 1 million is not free. 1 million is option. In that, how much is a free quotient you have?
$2.
Very good. 2 by?
5.
Very good. 2 by 5. That's it. That's the number of free shares. 1 million into 2 by 5. That also you can go straight away. Instead of finding number of shares at face value, how much, number of shares issued at no consideration, how much, instead of finding that, you can straight away find, okay, number of options is 100 or 1 million. In that, 2 by 5 is OC, free. So put 2 by 5 and find out what is the OC share or free share. Right? This is easy. You can easily do it. Okay, let us do this one. Just minimize it. Okay, I'll try to write here. So this is problem number 123. Okay, I'll do it here. So which method you want me to do? I'll do both and show again. Is it fine? Or one method, any one method?
Both.
Both. Very good. Fine. So let me find out what is the options here. I actually want number of shares issued for free. So basic, how many shares I have? How many shares I have in general?
4 million.
4 million. I have 4 million already, right? Number of shares. Already I have 4 million. Now I'm going to find out only free shares. How many shares were issued for no consideration? So number of shares issued for no consideration. Bear with the handwriting. I'm writing in a stylus pen, so it will be like that. Okay. Number of shares issued for no consideration. So method 1. Okay, I'll do both the methods. So first I have to find out how many number of shares I can buy at the market price. So how many number of options I have first of all?
1
1
million.
million.
Okay.
1 million outstanding.
Yes. So options I have 1 million. What is the value of each option?
$3.
$3. So into 3. So I'm having an option to buy for 3 million. Okay. So number of shares at fair value, just find out. Number of shares at fair value, how much I can buy. That is, now what is the fair value of the share?
$5.
$5. It is given here. It's $5. So I have 3 million with me. With this, I can buy 1 share at 5 beans. This is also dollars. Okay, how many shares I can buy? 600,000. Am I right?
600,000.
So 600,000 shares I can buy. Okay. But how much I bought it?
1 million.
1 million I bought it. So how much is extra?
400,000.
400,000. Yes, Dun, are you getting?
Yes, ma'am. Yes, ma'am.
Number of shares issued for no consideration. That is free. Is equal to, I got an option to buy. I have 1 million option. Okay, but in that 600 only, I'm paying original cost. So actually I got 400 extra. 400,000 I got extra. I feel than this confusion, the second method is very easy. What is the second method? Instead of this, 1 minute, I'll just add some more lines here. So this is method 1. I go with the second method. Somehow I like it very much. Coming to the second method, what is that method? Again, I'm going to find out number of issues only. This or this I'm going to do. So number of shares issued for no consideration. Instead of going with the formula and all, better tell me what is the number of option you have. How many number of option?
1 million.
1 million. Free, I'm telling free, no consideration. How much is the free amount is there in my fair value? Out of fair value 5, how much I'm paying?
3,
How much I didn't pay?
2,
Mm.
2 by 5 is 2 by 5, right? Out of 5, 2 I didn't pay, but I got it. So how much it is? 400,000.
4,
Okay, this is nothing but this is fair value minus option price. And this is nothing but fair value. Okay, I don't want to use the formula as such. This is nothing but number of options. You can take the formula what I've already given. So you can take from that number of options into fair value minus option price divided by fair value. So you get 400. So number of free shares, I got it. What is the formula to find out the EPS?
profit after tax divided by ordinary shares.
Number of shares. Okay, so that is earnings divided by number of shares. Okay, earnings is how much in this problem?
2 million.
2 million. Very good. What is the number of share? How many number of shares you had in the beginning?
4 million plus
4 million plus
400,000.
400,000.
4 million plus 400. Only the free quotient you have to take. Okay. 4 million plus 400,000 you will take. This is equal to 2 million divided by 4,400,000. So how much you're getting?
$0.4545.
0.4545. Which is equal to 45.45 cents. Could you understand?
Yes.
Yes, ma'am.
Okay. So let us go to the next one. That is 24. Oh, okay. So problem number 124. Okay, what figure should be? I always read the question first. What figure should be used as earnings by Gromit in earnings per share calculation? Oh, okay. They are asking how much is the earnings in this. Profit for the year is 2,800. They are asking what is the earnings in this problem, which you will take. For this, I think you have to go through a theory part somewhere. Just a moment. I'll just tell you, this is only after learning consolidated financial statement, you can solve this problem. Okay, whenever this DEPS is calculated, we have to take the parent company's profit for the year. Okay, you should ignore the non-controlling interest. This is a theory which you'll understand while doing consolidated financial statement. For this, you have to take profit for the period. You have to take only the parent companies. Okay, this you'll understand by learning consolidated financial statement. You just have to pick 2250 here and write it. That's it. They are asking which should be calculated for earnings by Gromit in, that is which figure should be used as earnings. Profit after tax and all profit for the year will take no. So how much you will take to find EPS they are asking. You will take only the parent company's amount. You should not take non-controlling interest. Parent company will distribute the dividend. So you have to take 2250. So with this, you'll understand only after consolidated financial statement. Now we go on to 125 here. So we are going to finish this chapter. So 125, which two of the following do not need to be removed from an entity's net profit in the statement of profit or loss in order to calculate earning figures to be used in earnings per share calculation? Which two we will not redeem it? We will not remove it. Do not need to be removed.
Ordinary dividends.
1 minute. Which you need not be removed for what? From an entity's net profit in statement of profit or loss to calculate earnings. Yeah, we'll go one after the other. Which should not be removed from? Okay, just tell me the order first. So we'll be having profit before interest and tax. From this, we
Less
subtract interest. Then we'll be
Then
having PBT minus
less than
tax. Correct. So we'll be having
after tax.
profit after tax. Then in profit after
Then-
tax,
Then
we'll be giving
preference shareholders will pay.
preference shareholders. Which type of preference shareholders will give?
Irredeemable or redeemable, I guess.
Redeemable.
Redeemable. What is redeemable, irredeemable? Who can be converted to equity?
Redeemable.
Redeemable. Redeemable. So here, to whom we'll give first then? Irredeemable. Am I right?
Oh,
You have to give to irredeemable. Then you'll be having earnings available to equity shareholders. Then you will give it to dividend and the remaining you'll retain as retained earnings. Am I right? This is a flow, no?
Yes, ma'am.
Okay, now you see the problem. They are asking which of the following do not need to be removed, which should not be removed from an entity's net profit to calculate earnings figure to be used for earnings per share. That is, this amount I need to get earnings available to equity shares. Which should not be removed, they are asking. Number 1, redeemable preference shares. Will they be there? This is the
Won't be removed.
problem. Whenever it is given, should not be redeemed, you have to understand in a different way. So, which
Remove.
should we have to remove this? So, they are asking which should not be removed.
ma'am, irredeemable and ordinary dividends.
See, understand the question again. It should not be removed. To find
Redeemable,
EPS.
redeemable won't be removed. Irredeemable will be removed, ma'am.
Okay. See, redeemable, where it will come, this redeemable, where it will come. Will they come here anywhere?
No.
No, they'll come at the end. So already they are removed only. Am I right? Okay, let us read still more clearly. Irredeemable also, irredeemable. We have to understand this. Do not need to be removed. This is the crux here. You have to understand that. We'll go to C. Profit attributable to non-current interest.
Should be removed.
So does it qualify? Do not need to be removed?
No.
No. So this is ruled out. Then coming to D. An error in expense discovered after the financial statements have been authorized for issue. You remove it or not?
Ma'am, we'll
Will
have
you
to correct
rectify?
it, ma'am.
We
We'll
have to correct it. So they are asking, need not be removed. They are asking, will we correct this or not?
We will correct it, ma'am.
We will correct. So this need to be removed. But the question here is do not need to be removed. So this need to be removed. So leave it. Coming to ordinary dividends. Tell me about ordinary dividends.
Ma'am, ordinary dividends are paid to the equity shareholders
At the end.
at the end.
So they are
So it is paid
asking.
to retained earnings to the equity shareholders.
So it will go to retained earnings. No, it will go to equity shareholders. It will be distributed to equity shareholders, right? So the question here is, which need not be removed from entity's net profit or statement of profit or loss to calculate earnings figure? First of all, my question is, will this ordinary dividend appear in your SOPL, that is before computation of earnings?
Oh, no.
No, it won't be there. See, but now we have to take this question in a different way because the question is asked in reverse. Which need to be removed means easily you can tell here. Okay, which and all need to be removed if these things are appearing. Which and all need to be removed? Tell me that. Then we'll go in the
Profit
reverse.
to non-controlling interest and
Need to be removed, right? And error and expense also need to be removed. Now coming to ordinary dividend, leave that. Ordinary dividend, redeemable preference share, irredeemable preference shares. Take all these three. That is A, B, and E. In this, which need to be removed? That is, who are eligible to get the dividend? Tell me that.
Irredeemable preference share dividends.
No, that is who are going to come as your equity shareholders. Irredeemable or redeemable?
Redeemable.
Redeemable. So only A and B, they will get the earnings. What to say? Earnings at the end. Irredeemable preference shares. My question is still more. I have to frame it, I guess. So this irredeemable preference shares dividend, where it will be coming in this flow? In this flow, where it will come? Before earnings available to equity shareholders
After
or
the
after?
tax.
After the tax and before earnings available to equity shareholders, right?
Yes, ma'am.
So this has to be removed. Am I right?
Yes, ma'am.
Yes,
Okay.
ma'am.
So this also has to be removed. This redeemable preference shares dividends and ordinary dividends need not be removed. That has to be given from earnings available to equity shareholders. So in this question, understanding is very different because the question was asked in reverse. So whenever a reverse question is asked, you turn it up and find and exclude the options. This will take some time to understand. Okay, they've given here very clearly which do not need to be removed from an entity's net profit in a statement of profit or loss in order to calculate earnings figure to be used in earnings per share to compute earnings figure which need not be removed means redeemable and ordinary shares. That is who are going to get it. Them we need not remove it. Remaining and all we have to remove it. That is earnings, which earnings per share computation, we need only A and C. We don't need B, C, and D. That is that and all. Initially itself, we will remove it. Ultimately, we will get earnings available for equity shareholders. In this, we will give to the convertible portion and the normal ordinary shares. So that is a question here. It takes some time to understand. Could you able to understand a little bit? You have to go through this question again.
Yes, ma'am.
Okay.
Yes,
So
ma'am.
let us go to problem number 126. So here, this is the last question, I guess. No, 127 is also there. Today we'll try to finish it as much as possible. Only 6 minutes more. Okay. Problem number 126. Aqua has correctly calculated its basic earnings per share, normal EPS for the year. Allocate the items to the apportioned category, included within diluted EPS, included within EPS, basic EPS. So you know what is a diluted EPS? What and all will be there in diluted EPS? Which type of
Options, warrant.
options, warrants? I can
Options.
call it as convertible portion. Am I right?
Yes, ma'am.
Yes, ma'am.
Okay. So let's see one after the other. And what and all will be coming in basic EPS? Any
Rights and
rights?
bonus.
Yeah, fine. We'll see that.
Bonus.
So yeah, first one we'll see. I'll put it as 1, 2, 3, 4. It will be easy. So I'll put 1, 2, 3, 4 because I cannot write there everything. Already handwriting is going to pathetic. So 1, 2, 3, 4 is there. Now see the option. I'll write here. One is DEPS and another one is EPS. Let's see. Number 1. 1 for 5 rights issue of equity shares during the year at $1.20 when the market price of equity shares was 2. Where will you consider this option?
Basic.
No, where will you include it? Basic or DPS?
EPS.
EPS, you will take it in EPS, basic EPS, you will take it. Very good. So I'm getting 2 answers only. Then the second one, the issue during the year of a loan note convertible into ordinary shares. The convertible is
DPS.
coming here. Yes.
Yes.
PS only I'm getting. I'm not getting the full form.
DPS. DEPS.
DEPS. So number 2 is coming here. Number 3, the granting of directors share options during the year exercisable in 3 years time. What is it?
Ma'am, DEPS.
EPS.
EPS or DEPS?
Ma'am,
Diluted
DEPS.
earning per share.
Better. Diluted earnings per share 3. Why? Because options are here. And the convertible exercise after 3 years, some futuristic aspect is there. So DEPS. Then next, equity shares issued during the year as a purchase consideration for acquisition of a new subsidiary.
Earnings per share.
Only earnings per share because you don't have any convertible or futuristic there. So you have to place accordingly. If this type of question is given, you have to type it. I think you have to pull and drag and drop there. You'll have some options, some different interactive question papers you'll be having. So you have to pull and drag the option there. So let us go to 127. Many commentators believe that trend of earnings per share is more reliable indicator of underlying performance than the trend of net profit for the year. So this is a comment. This is the opinion given. Which of the following statements support the view? They are telling that trend of EPS. Okay, EPS will give a more good indicator than the trend of net profit. Sometimes net profit will increase, net profit will fall down. So likewise, EPS also will increase and fall down. The trend will draw, right? We'll be seeing, right, whether it is going up, down, this ECG report like that will be having something. This trend of EPS is much reliable than the trend of net profit. So they are asking which of the following
Yes, false,
statement, what?
Is false, ma'am. Because net profit will obviously affect EPS.
Okay, 1 minute. So which of the following statements supports the view? The first one is net profit can be manipulated by the choice of accounting policy, but EPS cannot be manipulated in this way. Is it true?
No.
Why?
Ma'am, because you take into account the net profits of the year, ma'am. I mean, the
EPS itself is calculated based on net profit. If net profit is manipulated means EPS is also manipulated. So this is not a proper argument. Then coming to B, EPS takes into account the additional resources made available to earn profit when new shares are issued for cash, whereas net profit does not.
True.
You're telling true. We'll come back to it. That is my opinion. We'll come back to this after. Since if there is a little iffy also, better go to eliminate the options, then we can find out. C is the disclosure of diluted EPS figure is a forecast of the trend of profit for future periods. Did we went through any of such theory in our problem like that? Yeah, that is EPS will indicate your future profit. Is it mentioned anywhere? Will
No, ma'am.
EPS give the future profit? No, this is wrong. Okay. Then the comparative EPS is restated where a change in accounting policy affects the previous year's profit.
False.
We didn't do because of accounting policy change, right? When we will restate it, only when bonus are issued. Am I right?
Yes, ma'am.
Okay,
Yes,
so
ma'am.
this is wrong. So B is correct. So let's read what is there in B. EPS takes into account the additional resources made available to earn profit when new shares are issued for cash, whereas net profit does not. What do you mean by this? EPS will take into account additional resources. Yeah.
We have seen the question in the question itself, no, ma'am, when calculating the EPS, as the when the cash increases, the issue of shares also increases.
Cash increases, issue of shares also increases. I didn't get you. I didn't get you.
Ma'am, like the way we have seen in the question of DEPS, like even the shares also increase, no, ma'am.
The number of shares is okay, fine. So here what it is given, EPS takes into account the additional resources made available to earn profit when new shares are issued for cash, whereas net profit does not. Why? Net profit will take into account only your operating and other income activity, whereas additional resources part and all will not be covered in your net profit. Whereas EPS will take into account your new shares issued, everything. So in that way, EPS is better than net profit. So B is the correct statement which justifies the argument. Am I right?
Yes, ma'am.
Okay. So time is 12:51. We'll do one more problem and finish it. Okay. Problem number 128. It is related because scenario based, we'll do it in the next class. This one problem, we'll do it. It's very, very easy. We have solved for 2 problems based on that only. We'll do this and I'll end the class. Okay. That is on 1st October 2003. H had 2.5 million equity shares of 50 cents each in issue. That is $2.5 million. This is rupees. This is the value. Okay. They didn't give number of equity shares. And one equity share is 50 cents. Okay. No new shares were issued during the year ended 30th September 2004. But on that date, there were outstanding share options to purchase 2 million equity shares at 1.20 each. The average market value of H's equity share is $3 per share. H profit after tax is given as 1550. So they are asking what is the DEPS for the year ended. It's the same style what we did now, but one difference, slight difference is they have given the value here. So you have to find how many number of shares there to go to the last step. So now which method you want to do? You want to do the first method or second method? Second one. So let us find the number of shares issued free, or for free is looking very bad, for no consideration. Decently we'll write it. Okay. No consideration. Okay. How many number of shares were issued for no consideration? How many number of options I have?
2 million.
2 million. It is given here. Okay. So I'm going to find 2 million into, okay, what is the market value of the share or the fair value?
3.
3.
I'll use yellow color. 3 million is the fair value. How much you are paying as a holder of option?
1.20.
How much is the difference? OC is how much?
1.8.
1.8.
1.8 divided by how much?
3.
3. Okay, how much you get?
1,200,000.
1,200,000 shares. This is your free shares. Okay. What is the total number of shares now? So for that, I should find how much is the basic shares. How many basic shares I have? Basic shares, how to find the number? So
2.5 million
Hmm.
divided by 50 cents.
That is, I have a box of chocolate that the number of the chocolates are worth 500 rupees. Let us assume 500 rupees. And one chocolate is 5 rupees. How many number of chocolates then I have in the box? 500 rupees worth of chocolate I'm having in my hand, and one chocolate is 5 rupees. So how many number of chocolates I have?
Divided by 5.
Yeah, how much?
500.
One chocolate is 5 rupees, and I have 500 rupees worth of chocolate in a box.
100.
100, right? Okay, now the same concept here. I have 2.5 million number of worth of shares, dollar, and one share is 0.50 cents. No. So what is the number? What I should do? Calculation. Okay, 5 million shares.
5 million.
Or else you have to just double it. Double it. That's it. Okay. So I have 5, sorry, not rupee, a dollar. Not dollar. Okay. So I'll be having 5 million shares. Okay. How much is the free shares? Or the shares for no consideration?
1,200,000.
200,000. Now tell me, what is the DEPS?
25
Profit
cents.
divided.
DEPS is equal to, I want the steps. That's very important. How much is this?
1,550,000.
That is my net profit is given here as 1,550,000 divided by this total. This total, how much I got?
6,200,000.
6,200,000 shares. So how much is DEPS?
$0.25.
0.25. Should I have to express in dollars?
Cents, 25 cents.
25 cents. So the option is A. I hope everybody understood DEPS calculation. Can you understand now? Are you clear?
Yes, ma'am.
Others, what happened? One person answered and the one person is replying me. What happened to
Ma'am,
others?
can you scroll right?
Yes, ma'am.
Yeah. Yes, Adrian?
Ma'am, can you scroll right? Ma'am?
Right.
Thank you.
Right. Okay. Okay. Sometimes I used to skip the steps. So I just want to write it. Could you understand? DEPS is easy or tough?
It's okay, ma'am.
Okay, yeah. Okay, fine. So, okay. So we'll see in the next class, this constructive base, only one problem. So next class, we'll finish this chapter.